Machines that work day and night without an operator. AI that recognizes a weed from a crop plant. These may sound like science fiction, but they have been brought into reality by none other than Deere and Company, one of the largest construction equipment and farm machinery manufacturers in the world. It operates through four segments. Production and precision agriculture provides equipment like tractors, cotton pickers, and soil preparation machinery. Small agriculture and turf equipment serves various functions such as mowing, tilling, and debris handling. Construction and forestry provides parts for earth moving, road building, timber harvesting, and more. Financial services provides loans and leases. I rate Deere as a buy. This recommendation is driven by its unique business model, long-term potential, and favorable environment. First of all, Deere provides a stunning range of products and services. It provides digital tools like the Operations Center or Stellar Support. It provides financial services. These include loans and equipment leases. Deere, as an extremely financially healthy company, is likely to continue its steady path upwards long term. The agriculture industry is driven by consistent global demand for food. This means Deere's operations overall will benefit in the long run. As for favorable environment, Deere can take advantage of multiple trends such as sustainability or the integration of AI. With more than enough resources to innovate, Deere is likely to benefit from these conditions. The global construction equipment market is projected to grow with an expected compound annual growth rate of 5.9%. The global artificial intelligence market within the agriculture industry is expected to accelerate at 22%. Meanwhile, the U.S. agricultural sector shows promising signs of growth, particularly influenced by interest rates, which impact farmers' earnings and borrowing costs. Once rates are lowered, Deere will likely benefit, especially when considering the financial services sector that makes loans. Deere is protected by a variety of wide moats. As one of the largest manufacturers of agricultural machinery, Deere benefits from economies of scale in manufacturing, distribution, and research and development, giving them a cost advantage over competitors. Brand recognition. Deere has built a strong brand presence over its long history, again making it difficult for competitors. As for intangible protections, Deere has a total of 20,778 active patents that provide protection for its unique technology and create a strong competitive advantage. As recently as November 2023, it won $16 million in a lawsuit against two companies who had infringed on those patents, showing how powerful this protection is. Some main highlights of the Porter's five forces. The intensity of competitive rivalry is moderate because none of the main competitors have a diverse range of services that Deere offers, and many operate in different regions or markets entirely. For example, AGCO Corporation focuses specifically on agricultural machinery, overlapping with only about 2 out of 4 Deere segments. Thus, the intensity of competition is reduced. Deere's strategic acquisitions like Spark AI and Smart Apply also help them expand further. The bargaining power of suppliers is low because while certain providers of specialized components may have some bargaining power, Deere as a large company has long-term relationships and enough power to negotiate. Additionally, besides its over 4,000 existing suppliers, Deere has been looking specifically for small and diverse businesses. This will dilute supplier power even further. The threat of substitutes and bargaining power of customers are low because many of Deere's products and services are unique, like mentioned previously. The threat of new entrants is insignificant because of how high the barriers to entry are. Deere is both profitable and growing steadily. They have an ROE of 33.58% compared to the industry average of 19%, revealing its success at turning investments into profits. Its gross margin is 37.7%, and its operating margin is 18.51%. Its average 5-year revenue growth is almost 12%, showing steady growth. As for value, its PE ratio is 11.63, below the agriculture industry's about 28. It also regularly returns capital to investors through dividends and stock repurchases, having returned a stunning 167% in the past 5 years. Since 2020, they have also increased dividend payouts almost 93% and is likely to continue this path, making it a wonderful long-term buy. My target price is $439 per share, approximately 18% upside. First, I performed a basic DCF valuation and arrived at that projected price. I chose not to use a relative valuation for Deere because the focus on the PE ratio neglects unique aspects of Deere's business model, financial performance, and growth prospects. Not just satisfied with plugging in numbers into a template, I also created a more detailed version of a DCF model by doing research into specific parts of the process and what they mean. I used the beta, the cost of equity, cost of debt, and weighted average cost of capital to find the enterprise value. The resulting target price was $447. The prices ended up relatively close, but I decided to simply go with a more conservative one. Of course, Deere is not without its risks. First of all, the cyclical nature of agriculture. Deere's earnings will be affected by any fluctuations in demand for agricultural machinery, and those can be caused by anything from adverse weather to economic downturns. However, since agriculture is always essential and the demand for food will only grow with the world's population, the overall long-term trend should be upwards. Deere has operations throughout the Americas, Europe, and Asia, and those can be affected by trade tensions, currency fluctuations, and regulatory changes. However, in the long run, these are unlikely to be huge risks for the established and experienced Deere. As for technological disruption, rapid advancements in competition and technology would require significant investments from Deere to keep pace. However, they have likely already discovered this risk and begun mitigating it by devoting resources to research and development, spending $2.2 billion on this in 2023. Deere has been working towards sustainability in both product development and operations. Their Relife program has been bringing remanufactured components, which lengthen product life while reducing waste and lowering costs. They also launched 4 electric and 2 hybrid products, reducing fuel consumption. In the past year, its facilities reused over 2 million pounds of wood, reduced 30,000 cubic meters of water consumption, and saw a 15% decrease in greenhouse gas emissions. For social, in 2023, Deere founded a Diversity, Equity, and Inclusion Global Advisory Board and held an Employee Resource Group Leadership Summit for employees. The John Deere Foundation recently made 3 of the largest grants in its history, totaling $19 million to eliminate global hunger. Their Inspire program supported 4 million hours of STEM education in marginalized communities. For ethics and diversity, Deere was recently recognized as one of the world's most ethical companies for the 16th time. They have been actively seeking to include more diverse suppliers, and within the company itself, African American representation in senior management increased 23%, and the number of women in STEM-related positions increased 30%. As AI develops, a potential risk is the competitive pressure as companies rush to secure an advantage. However, Deere benefits from its large size and cash flows, giving it the power to invest in research and innovation, more so than smaller companies trying to enter the market. With the development of AI, Deere has many opportunities to incorporate new tech into its products and find applications in the industry. Instead of making a speculative investment in AI tech, it can focus on integrating AI in a way that adds value to its existing products and services. This allows Deere to avoid being overly exposed to a potential AI bubble and ensure that growth is sustainable long term. Deere has already been taking advantage of these opportunities. For example, See and Spray Ultimate is a software that trains AI models on images to distinguish between weeds and plants. The Smart Apply intelligent spray control system then applies that to enable more efficient herbicide use. As Deere's Vice President of Automation and Autonomy declares, Deere is set up to become a world-leading robotics and artificial intelligence company. Thank you for listening.